Ladies and gentlemen, on behalf of Edelweiss, I welcome all the participants logged in for the conference call of Zuari Agro Chemicals. From the management, we have Mr. Sunil Shetty, Managing Director, Mr. Sandeep Agrawal, Group CFO, and Mr. Nitin Goyal, Head Investor Relations from the company. Good morning, gentlemen.
Good morning, Rohan.
Morning, Rohan.
Good morning, sir. So, sir, we can just start giving us some clear on the quarterly results and the industry performance. I understand, sir, for the benefit of investors, we are hosting this con call, though it is delayed by a significant amount of time after releasing our result, but due to the extensive travel plan of management, we could not host it earlier. I hope the conference will be helpful for all the investors. Over to you, sir. Please go ahead.
Thanks, Rohan. Let me apologize for this delay. And you're right, we all were traveling substantially during this period. Anyhow, I'll go straight to the quarter. Rainfall during this period, during the monsoon period, that's the 1st June 18 to 30th September 18, was lower by 9% than the long period average. The actual rainfall during this monsoon season was about 804.1 mm versus 887.5, which is the normal. And many of our areas, basically North Karnataka, Marathwada, Maharashtra, received 29 and 22% less rainfall during this period. Water availability also in the reservoirs is higher during this period. Now, coming back to our operations, if you remember that last time I had talked about availability of P2O5 in the first quarter, which was lower, and that's why we couldn't produce as much of our complexes and DAP. But this quarter, we were fine on availability. If there was any real delays, the delays came from the ports, where due to large imports and availability of wagons, a lot of movement did not take place, or it was delayed. But on an overall basis, Zuari has had a loss during this period, and some of the main reasons for this are when you look at the phos acid prices, and now I'm really talking about the 6 months, or I'm talking about right from 1st of January till there has been a consistent increase in the P2O5 prices. This has had an impact of up to about, if you just looking at DAP, it has an impact of about 6,000 rupees per ton. Added to that has been the depreciation of the rupee, which again, if you look at it, it has had an impact of nearly 3,000 rupees per ton where our products are concerned. Now, with this kind of increase, we have gone to the market 5 times and increased our prices. But we have not been able to increase our prices to the extent the actual loss has taken place due to the increase in both the phos acid price and also because of the rupee depreciation. There has been a time lag. We have always been behind the time lag. And even today, we are running behind our cost. Clearly, the indications that I can give you for the future would be very few, except to the extent that, yes, all indications in the market are that the phos acid prices should come down. But, of course, it depends on our negotiations and also how DAP prices behave in the future. As well as, thank God that rupee has stabilized to a certain extent, though somewhere at around 72 to 73. It's not as volatile as it was during the last quarters. And but because of this, our margins in the complex products have fallen, and this has led to margin compression, and which has been impacted on our results. Secondly, I've also lost market share during this period, both in case of DAP as well as in case of MOP. This was because of lower availability of stocks as on 1st of April. We had, if you remember, we had actually increased our market shares last year. So at the time, we did not have enough of material by 31st of March to take care of our further. And then also added to that was we didn't have enough production because of phos acid in the first quarter. But given the situation that the second quarter production improved, and with the increase in in the prices of DAP and increase in the, and now I'm talking of imported DAP, with the increase in the price of imported DAP, the weakening of the rupee, there were times when even imports were not making any sense and we were not making any substantial money on DAP, which has changed today with the prices that we have increased. We have increased over a period of time about 5,500 in our DAP pricing. And that has, currently the situation is that manufacture of DAP today in the country, at least by Zuari Agro Chemicals, is not as profitable as import. So we have been focusing on imports, and we have converted most of our DAP production into complex, and where we are making better margins, but not as much as we were making last year. So that's the overall situation. Where MOP was concerned, we imported a lot of MOP last year. We sold a lot of MOP last year. We had gained a lot of market share. This year, the MOP pricing itself took a long time being finalized. The the exporters wanted a much higher increase. They were first negotiating with the Chinese, then they started, when they could not make headway with the Chinese, they then negotiated with us. And due to the delay in the, because they were asking for huge increases, and these increases, it was difficult for us to absorb these increases in the market. So there was a delay, and as I mentioned, we didn't have too much stocks of MOP, and even whatever we had imported was stuck at our ports. So during this period, MOP sales were also lower, which again led to a certain amount of drop in profitability. But now we currently we have imported substantial amount of MOP. We are also looking at if you can increase the price in the market, but this is not something that I can straight off indicate to you, because one has to look at to what extent the farmer is going to accept further increases. So this is the situation where both my manufacturing and marketing is concerned. Plants have been running fine. There's been absolutely no problems there. And DBT again has affected our interest cost. You must look at it that at one point of time where DBT was, when the minute we sold or dispatched our goods from the factory, we used to get at least 90%, and 10% used to come 6 months later. Currently, we have to wait till the actual consumer, the farmer, picks it up against the POS. That has increased the amount of current assets that we are holding, and that, when Sandeep will talk about, has also impacted our interest cost. That's the situation, and old pending issues have not been so far cleared. We are taking it up with the government. So on an overall basis, clearly the situation is a little tight. We need to look at what kind of increases we can get in the market. We need to clearly reduce many of our costs. We are working on a profit improvement plan, which is a task force which is going into just about every aspect, whether it's in the plant, it's going into the aspects of marketing, distribution, interest. We are looking at every aspect so that we can, over a period of time, strengthen Zuari. And you are aware that we are also looking at a rights issue, which is on track, and we are currently finalizing all the documents, so that should also happen. That's, I can't say anything more than that with regard to the future, but we are really working very hard to make sure that we move out of the current situation that we've gotten. And as one more thing which you would have, we had indicated to the stock market, we decided on a priority basis that the energy efficiency capital expenditure, which will be done at a cost of about 380 crores, is what we'll do at the moment, and we've given priority to that. And we are holding the revamp project for the time being. I don't think a decision will be made in a hurry for that. but we've already started initiating everything for the energy efficiency, a capex of 380 crores. So that's it from my side. I will pass it on now to Sandeep.
Thank you, Mr. Sethi. Gentlemen, I will take you through the financial number for the quarter as well as 6 months ended September, both standalone and consol basis. Our presentation on the Q2 numbers are available on our website, so you can look at those numbers also at your leisure. But for the benefit of this call, first I will take the standalone number. So during the quarter, Zuari has achieved revenue of 1486 crore as compared to 1368 crore in the corresponding quarter last year. So there is an increase of 8% in the revenue. In terms of EBITDA, company has posted an EBITDA of 60 crores during quarter 2 as compared to 130 crore EBITDA in the corresponding quarter last year. So there is a decline of almost 50 to 60% in the EBITDA of the company. At PAT level, we posted a loss of 5 crore as compared to 36 crore profit in the corresponding quarter last year. And if I talk about the YTD number, 6 months ended, we posted a revenue of 2,848 crores as compared to 2,128 crore. So there is an increase of almost 34% in revenue. The increase in revenue mainly on account of higher sales as well as the increased prices of the product because of the steep increase in the raw material prices. At EBITDA level, we are at 129 crore for the 6 months ended in September 2019 as compared to 155 crore in the corresponding 6 months ended September 17. At the PAT level, we are at 14 crore loss for the 6 months ended as compared to 9 crore profit in the last year 6 months. Now I will take you through the console number. So at the console level, this is of course, let me remind the investors that we are consolidating only MCFL. Paradeep being a joint venture company, only one line item comes in the PAT level. So revenue etc. is only for Paradeep, MCFL and Zuari Agro. So at the console level for the quarter, we achieved a revenue of 2,462 as compared to 2,156 crore last year. So there is an increase of 14% in the revenue, and 6 months ended revenue also gone up by 28%. So as against 3,498 crore, we achieved a revenue of 4,480 crores. At PAT level, at PAT level, we are at 47 crore at the console level as compared to 75 crore in the corresponding quarter last year. And at 6 months ended, we are at 39 crore as compared to 55 crores in the corresponding 6 months ended last year. So these are all about the debt position also I would like to highlight for the benefit of the investor. So the net debt as on September 18 is 2,445 crore as compared to 3,093 crore in March and about 2,980 crores in September 17. The decrease looks like that the net debt has come down by 600 crore, but this is mainly the reclassification because in February 2018, RBI has stopped buyer's credit, which used to appear in borrowing. Now that has been substituted by supplier's credit. So as per Ind AS, that has been accounted in creditors. So effectively, borrowing has not come down as compared to March. In PPL also, the borrowing is 920 crores, excluding supplier's credit, as compared to 1,831 crore in March. And in MCFL also, it is 1,000 crore as compared to 1,246 crore in March. So if we include supplier credit also in the net debt, then 30th September number as on for ZSCL is 3,100 crore, for PPL it is 1,868 crore, and for MCFL it is 1,345 crores. Thanks, Rohan. Now I think we can take the questions from the investors.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question, may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kritika Garg from Equitas Investments. Please go ahead.
Hello. Good morning, sir. So I wanted to know, so this urea project where you said that 380 crores that we are going to do the capex, so are we not going ahead with the 1350 crores or have we delayed that?
Okay, let's see. As it stands today, I don't have the government approval for the project. That's one. The second thing is, because of the rupee weakening, the cost of the project has gone up tremendously. So the decision was taken that as it stands today, let's keep the project on hold. A decision hasn't been taken to drop the project totally, but I don't see the project coming in a hurry. Clearly, it's very important for us that our energy is brought down. So on a priority basis, we are doing an energy project, which is actually, I won't say it's a one-to-one part of the revamp project, but a lot of it is part of the revamp project. So about 380 crores is what we're going to spend on this project. Now, let's also look at it that given the situation as it is today, and because I need my subsidies to come down, my outstandings, I need my debts to come down further. I think it's prudent. I think the company is taking a prudent decision at this moment to, as I can say at the moment, to delay this project. But I suppose once we take a decision, one way or the other, we will come back to the investors.
Okay, and have we achieved financial closure for 380 crores?
Yeah, we have already got the sanctions from banks. So the financial closure is done for 380 crores. Because this is a small amount and the financing will be done again in the same ratio, 70-30. So we need about 200-250 crores for this project as a debt. So we have already got the sanctions from bank. So the financial closure is done. And equity part will be coming from the rights issue, which we are doing.
Okay, and when do we expect to do the rights issue by?
So rights issue we are planning to file sometime in December so that we close the rights issue, everything, the money should come in by March.
Okay. And so my question about other expenses. Other expenses are pretty elevated.
So other expenses has elevated mainly because of the power and fuel cost, which has gone up. The gas prices has gone up. And then certain one-time expenses also came, which includes forex and certain consultancy we paid to AD Karni, etc. So that's the main reason for increase in other expenses. So power and fuel, what has gone up, that is partly offsetted by increased revenue from the urea operations because those are passed through. Because since gas prices are going up and we are getting subsidy on that.
But expenses to AT Karni are on a recurring basis, right?
No. These are one-time expenses. We engaged AT Karni for 18 months. So they did certain activity for these 18 months. So these expenses were booked in this financial year. And apart from that, forex was quite volatile during this particular 6 months. And we also done some VRS for our canteen worker, so which is also a one-time expenses. So on net, if I talk about, so for 6 months ended, one-time expenses are about 15 crores. And forex is you can say notional expenses. So my MTM losses were about 25 crore odd, which is higher than the last year. So now the currency is stable and it is on the declining trend. So we may see some benefit going forward.
Okay, how much were my MTM losses in the corresponding period last year?
So last year in other expenses, we had about only 3 crore rupees for 6 months. And this year we have 31 crore for 6 months. So about 27 crore more.
Okay, and for the quarter, could you give me the breakup of the forex losses?
So for the quarter, we have about other expenses includes about 19 crores. And in quarter one, it was about 12.5 crore.
Okay, and what about the AT Kearney and the VRS expense for the quarter?
As I told you, these are 6 months, we have incurred about 15 expenses. Okay. So you want quarterly breakup, you can write to Nitin, he will give you it.
So then how do we expect to improve our EBITDA margins? Because our raw material costs are elevated at 76% and our other expenses are 18%. So effectively, our EBITDA margins are very low on the
EBITDA margin, Kritika, the thing what Mr. Sethi explained, that this is the factor, main factor is your NSR. Because unless you improve your selling price, your EBITDA margin cannot improve substantially. So if I look at the 6 months ended performance of the company and vis-a-vis the raw material prices which has gone up, so there is still an under recovery of close to 1,000 to 1,200 rupees per ton of sales. So which we are trying to recover from the market by gradual price increases. So if you calculate based on that.
If I compare ourselves even to our industry peers, I mean, we are little more inefficient than them when it comes to margin.
Industry peer have phos acid with them. We don't have. We operate on the bought out phos acid, whereas the peers have phos acid, their own phos acid supply. So if you really look at our Paradeep also, which has not impacted that much as compared to Zuari.
Yeah.
No, I think I'd like to add to this that it's very clearly if you have an integrated plant, then most of our industry peers have integrated like we have in PPI. You've done better. At least the impact of what has happened has not been as severe as it has been with Zuari. Once again, I like to tell you, there are two aspects. One, I need to obviously increase my sales because, as I said, I lost market share. So I need to increase my sales, which we've tackled in a big way. Second is that we have to look at how my net realization can go up. And as I indicated, there are indications that at least in potash we would be doing that. Where the rest is concerned, there is a time lag of between what the increases go up and to the extent that we can recover from the market. We do not expect any major increases to come in. Of course, either in the phos acid or where the rupee depreciation is concerned. And lastly, we are working on just about everything which we were. But today the focus is far more on seeing how we can reduce further costs across the board in case of all the companies, not just taking a leaf from Zuari. We just decided that we'll do a profit improvement progress plans in all our companies, and that's what we are working on. And we have been able to identify certain areas where we would be able to bring it. So, I mean, that is something that as the truth in the pudding will be in its eating. So once we prove it, should happen. So that's the way the situation is today.
Okay, and how do we expect H2 to be?
Well, we don't give guidance, you know that. And overall, Mr. Sethi has already explained that we don't expect any further increase in the phos acid prices, and that's what we are targeting for. And at the same time, if it comes down a little bit, that's always better for the company. Currency is also stable. So your NSR, we are constantly pushing in the market to increase the prices. Post 30th September also we have increased the prices, and we keep on increasing in consensus with the looking at the farmers' ability to absorb the increase. So based on that, you can form your own view, but generally we don't give guidance on the numbers.
Okay, but the increase in price has not been equal to the increase in cost, right? Yes?
So far, no.
So far, no. Not completely passed on.
Okay, and what is the differential yet? Like, how much have we increased our prices till date and how much have our costs gone up per ton?
So I think
I think you would say anything between 1,500 to 2,000 we've not been able to recover from the market.
All right. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. The next question is from the line of Girish Raj from Quest Investments. Please go ahead.
Yeah, hi. So your view on the inventory industry level would help. And secondly, what is the cost increase because of switching from buyer's credit to supplier's credit?
So inventory level are like very difficult to give you the guidance on the inventory level because how much inventory others are holding, it's very difficult to say. But I can give you some guidance on the sense that inventory level has come down as compared to FY17 because of the DBT and people or industries not holding too much material in the channel. Whatever is required for the channel, that much is there, and of course some excesses of the past will be there. But in terms of quantity, very difficult to tell you the numbers. And as far as cost increase between buyers and suppliers credit, it is about 100 basis points.
100 bips. Okay, sure. Thank you.
Thank you. The next question is from the line of Nihal Jam from Edelweiss Securities Limited. Please go ahead.
Hi, sir. Good morning. So just continuing on the standalone operations, you mentioned that the current under recovery is around 1,500 to 2,000 per ton. Is this the scenario even after taking the price increase in October that we are facing that?
No.
So currently, what is the under recovery, or are we making the normal profit that we was compared to last year?
So as I said, the under recovery in my earlier statement also I said it is close to 1,200 to 1,300. So what Mr. Sethi said, post that we have increased the prices in November by about 400-500 rupees. So the current under recovery will be closer to 1,200 to 1,400.
Okay. And do we have any thoughts on, say, increasing the prices, say, in the coming months to totally cover the under recovery that is happening right now?
So we are now, since Rabi season is already started, so we have to look at the farmer's ability to buy also at the elevated level. And since the old MRP materials are available in the system, in the channel by the various players in the industry, so unless the old MRP prices are materials are consumed, it's very difficult to establish the new price in the market, and that is the main reason for time lag between, the price increase and the cost increase. So we are pushing very hard for increase in the prices. So let's see, but the saving grace is that the currency has fallen from 74 to 72 now, so which is helping us in our lower cost of production. And of course, if Q4 prices of phosphoric acid also comes down, so that will help. So we will see at the appropriate time, looking at the market situations and the inventory level, how much price to increase further.
Okay, sure, sir. So you mentioned on parity phosphate and obviously the fact that the backward integration has helped in improving profitability. But even looking at Mangalore Chemicals, it has approximately 40% of its capacity in DAP. So how is it that we've been able to improve the profitability there, say, despite the impact of increasing phosphoric acid prices?
So in Mangalore Chemical, if you see, there is a note in the financial statement which talks about that we have taken some 30-odd crores in this quarter towards the urea escalation claim which we got during the quarter. So if you remove that or take the equalized number, then MCF is also in the same level as of Zuari.
No, I would just like to add one more thing out here, where MCFL is concerned. The kind of decision that we've taken in terms of reducing DAP production, the same decision has also been taken in MCFL, because complexes are giving us a better contribution than DAP is giving in both Zuari and MCFL. But then also there are certain additional costs that we tend to incur in Zuari because it is not in absolute proximity to the port. In MCFL, we are right on the port. In Zuari, we are further away from the port. So there is an additional handling of raw material that is done in movement from the port to the plant. And that, again, has an impact when you're at this lean stage, when you're really talking about how much is the contribution that one makes in MCFL and what is the contribution you make in Zuari. Obviously, the contribution in Zuari is lower because of those additional costs that are incurred by Zuari.
Okay. So just one more question was, you mentioned that I think that last year there was this focus on reducing the channel inventory specifically from Zuari side. And I think you mentioned that the opening inventory was not requisite and that is what led to a loss in market share. So do you think that going forward you will see to it that the channel inventories are sufficient and maybe you may see a reversal of the policy of, keeping minimal channel inventory going forward?
No. See, the channel inventory was, if you remember, is something that one used to talk about in the industry, which today I think more or less nobody is maintaining channel inventory in the manner it used to be, because it's not something that you're not going to get any subsidy on that. You get the subsidy only when the consumer is, and there's going to be no reversal in that policy. What is placed in the market during this period is placed into the market, which is directly with our dealers and who in turn will place it with their retailer. So that's where we are. What I mentioned when I talked about lower inventory is because we had substantially sold much higher than our competition in last year, and we had gained substantial amount of market share. So in terms of our positioning of material, we did not have enough material which especially some of our competition had in the market. So when it came to this year, when both the potash prices were not finalized, our competition still had potash available with them to sell in the market, while we did not have, because the prices had not been finalized, so we couldn't purchase fresh potash till the prices were finalized. Similarly, in DAP, at that point of time, even imports, you were not really making any money on imports based on the new prices of DAP and the weakening of the rupee. So we had to hold back certain amount of import. Our competition had substantial amount of material with them, so they gained market share. So I was giving you an example of why I lost market share in the first 6 months, as opposed to gaining substantially last year. But on complexes, we gained market share. That is, on all our NPKs, we gained market share because we converted much of our DAP into NPK and we sold that in the market. And obviously, I converted it because the kind of contribution that I was getting in NPK and also the requirement in the market was conducive to the sale of NPK. And to the extent that I had DAP available, I sold.
Okay. That helps, sir. So just one last question for Sandeep, sir. On the DBT part, I think there was a mention in the opening remark about, the interest cost rising. So is it that it's better to expect that in the new DBT scenario you will see the kind of increased interest cost, or will the situation change going forward? Just wanted your comments on that.
So on the DBT part, generally, when up till last year, when we were in the earlier regime of subsidy, so we used to get substantial subsidy in the first 6 months, because generally government's budget used to exhaust by September, October, and last 6 months dispatch-based subsidy we used to get in the first 6 months on account money. So that helped company in the past to reduce the borrowing level substantially and with the lower interest cost. But in the current year, since subsidy in the new DBT regime, the subsidy is paid only when material is sold to the farmer. So this has led to almost, you can say, 300 crore increase in the subsidy level at any point of time, because that much inventory is always available in the channel. So this led to increased cost, but we were expecting that, the earlier issues, the past subsidies will be released by the government in these 6 months, which did not happen because government focus is mainly on DBT and they are continuing mainly to release money on the DBT front. So as far as DBT goes, the payment is very smooth. For your information, even in case of urea, we have received even first week of November payment also under DBT, whatever has been sold to the farmer. So the government intention is to, make DBT successful, and it is the future. So their entire focus is on DBT. Now we are pursuing through our FAI and our personal meeting with the department that the old issues or old subsidy should also be released. So let's see how they release the old subsidy. But DBT is successful, and interest, you can say close to 300 crore worth of subsidy will always be there under DBT for individual companies, especially for Zuari I am talking. If I talk about the group level, all three companies, then it will be about 800 to 1,000 crore. Subsidy will always remain under EBT because that much inventory remains in the system.
Fair enough, sir. That's it from my side. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Ayub Bhutara from Equitas. Please go ahead.
So, hello. Yeah, sir. So, in our MCFL, power, fuel and water charges have almost doubled. So, any particular reason for that?
So, again, since the gas prices has gone up, they are still on naphtha. And with the increased crude prices, the same has gone up. So, their furnace oil prices as well as naphtha prices have gone up. That has resulted in increase. And these are all pass-through.
These are all pass-through, complete pass-through, right?
Yeah, absolutely.
Okay. Okay, sir, yeah, that would be it. Thanks.
Thank you. The next question is from the line of from Principal India. Please go ahead.
Good morning, sir. Sir, in case of PPL and MCF, we were also planning to do some capex. If you can just highlight and let us know the current status.
So, on the MCF, we are going ahead with the energy efficiency project. So, what we talked about earlier also. So, DAP plant or the, you can say increase in capacity is little far away. But and on the priority basis, again, we are going ahead with the energy efficiency project in MCFL. PPL, the capex, we are now preparing for the environment clearance for the entire project. And the studies are going on. So once study is complete, then we will come to know the exact amount and the scope of the capex. So both the capex plans are on, and we are moving ahead.
And the only thing is, in PPL, we do have a revamp project going on, which is on stream.
Thanks, sir. Sir, in case of MCF, you said that we are still on naphtha. But I suppose that we were supposed to get some gas by this January, February. So any update on that?
We should be. There were a lot of floods that happened in Kerala, and that delayed the project. I mean the pipeline. We should get it by March next year.
Okay. And sir, any update on this energy efficiency norm from the government? I know that they have postponed that. So any impact of that particular decision on our profit and loss account?
So energy efficiency norms have been extended to 2020 now, 6.5, and so we are indifferent till 2020. And we need to see going forward how industry behaves and what further policy government comes out. So it depends on the government. As of now, there is no impact.
No, the government has also come up, at least given us the policy which will go up to 2025.
Okay, sir. And sir, in case of consultancy fee that we have paid, so that will continue for another 2 to 3 quarters, or this was the last payment that we have made to them?
No, it will come. Some more fees will come in maybe current quarter because these will be the final fees. Thereafter, I don't see any further fees will come.
Okay. And any benefit that we are going to get from that, whether they have quantified like benefit of 30-40 crore that may come in FY20?
So it should come. Basically, the program, what we ran with A.T. Kearney, which was the total business transformation exercise, which includes the entire supply chain, the production process, the SNOP, you can say the optimization of the product. So all these will, of course, lead to much more profit than the number you indicated, but these will come gradually.
Okay, sir. That's it, and best wishes for upcoming quarter. Yes, thank you.
Thank you.
Thank you. The next question is from the line of Kritika Garg from Equitas Investments. Please go ahead.
Hello. So, what is our debt repayment plan for FY19?
Repayment plan?
Yeah.
We don't have long-term debt, Kritika. So, generally we are operating on short-term debts, which are mainly working capital. Small amount of long-term debts are there, about some 200-300 crore. So, you can expect some 30-40 crores will be repayment in next year.
So, we still expect our interest cost to remain at around 80 crores per quarter?
No, so you talked about debt repayment plans, so I talked about the long-term loan repayments.
Yeah,
now, as far as short-term debts are concerned, so as we indicated that we are coming out with a rights issue, so that will help in reduction of our debts. Apart from that, as I indicated that if we get substantial amount of the old subsidy from the government, so that will also help in reducing the debt. So the entire reduction in debt is contingent upon mainly from subsidy inflow from the government, and of course right issue, whatever is happening, that will help in reducing the debts.
So what is the size of our rights issue?
Rights issue, earlier we said up to 500 crores. So let's see how much based on the current prices and the formula, SEBI formula, how much money it comes. But I feel it should be closer to 400 crores.
Okay, and how much is the old subsidy outstanding?
Old subsidy is closer to about 500 to 600 crores in Zuari itself.
Okay, and can you also explain to me the urea escalation scheme in MCF because of which you got 65 crores?
So, escalation claims and de-escalation claims are generally what happens that based on certain prices, government fixes the subsidy for the particular unit. Now, during the year, your pool prices may go up, it may come down. So, these adjustment of increase and decrease happens once in a year or maybe half-yearly basis, depending upon whenever company files their claim. So, based on that, government issue a notification. Yes, the escalation or de-escalation claim has been accepted, and accordingly, the money has been generally being paid or recovered from the subsidy.
So that directly flows to my bottom line?
Absolutely.
Okay, and so for Zuari, we don't have this claim?
So MCFL, we account for on the quarterly basis in our books. Since MCFL is still operating in NAFTA, so their subsidies, because as per the policy, they will get lower of the subsidy, which is either gas pooling or NAFTA. So MCF generally does accounting on a conservative basis. That is why they are not accounting this on the quarterly basis. So that is why once the claim is notified by the government, after doing all sorts of adjustment, we take under in the P&L. But from next year onwards, since MCFL will also be on gas, so these kind of one-off won't be there. They will be also doing the same way which Zuari does.
So Zuari does in what way? On a quarterly basis?
Yes. Because gas prices are available from the ministry on every month basis, so we can quantify how much escalation or de-escalation will be there.
Okay, got it. Thank you.
Thank you. The next question is from the line of Ayush Bhatada from Equitas. Please go ahead.
Sir, you had mentioned in your last call that potash prices are also going up. So have they increased in the previous quarter?
Yeah, potash prices, earlier it was $240 USD. Now it has gone up by $50. It is $290 USD.
290. And you expect any more increase in potash prices?
No, potash prices are fixed for 1 year. So now this will be there up to June 2019.
Okay, and potash is mainly used in NPK and complex fertilizers, right?
These are into NPK in complex fertilizer, and potash is direct application, has also direct application. So we import and sell also.
Okay. So including the increase of in potash price of $50, you still think that complex margins will be better than DAP margins?
Yes, as stands today, yes.
Okay, sir. Thank you.
Thank you. The next question is from the line of Siddharth Mota from Principal India. Please go ahead.
Sir, any maintenance shutdown that we are going to take in any of our entity? Because I remember in the month of October 2018, we were supposed to do something in standalone.
So we have already announced that in the stock exchanges that Zuari Urea Ammonia is under shutdown currently, which I think we took shutdown on 20th of October and which will be over in the last week of November. And in PPL, we have already taken the normal shutdown, generally what we take, and MCF also we took in first quarter of this financial year.
So in Zuari standalone, due to this shutdown, any one-off that we can see in Q3?
No, shutdowns are generally scheduled in yearly basis. So maybe some repairs and maintenance expenses will come. Otherwise, I don't see any one-off as such in because of this shutdown. Rather, post-shutdown, my urea efficiency, the energy efficiency should be better.
Okay, sir. Thank you.
Thank you. The next question is from the line of Manish Mahavar from Antique Stock Broking. Please go ahead.
Yeah, good morning, Mr. Shetty and Mr. Sandeep. Yeah, sir, just wanted to understand. Yes, I just you said under recovery in the fertilizer business, especially in the manufactured front, is around 1,500 rupees, right? So this is despite you said around maybe you said in the earlier comment like DAP manufacturing will be lower and the complex manufacturing will be higher. So this is despite the better product mix, or what you're talking about is a like-to-like basis.
So, you have to see not only the phosphoric acid prices. During the year, the ammonia prices also remain at the elevated level. Right. So, and potash prices also gone up. So, if you look at the DAP prices, so DAP is mainly governed by the phosphoric acid and ammonia. So, in some point of time, in last 6 months, DAP manufacture was at the negative contribution. So that is why we said we kept on increasing the prices. DAP prices, which was 24,000 rupees at the beginning of the year, now it is at 29,000 rupees. So almost 5,000 rupees increase has happened. So now at least it has started giving positive contribution. Whereas in case of complexes, since P2O5 content is low and ammonia is also low and some content comes from potash also, so potash increase has happened by $50. Whereas phosphoric acid, if you look at from Q2 of last year, it has gone up by $190. So what we wanted to say that this under recovery is across. So if you look at despite of this product mix, so what we are trying to say that under recovery of 1400 to 1500 is with the revised product mix also. But of course, we have factored some DAP production, so which was giving us much lower contribution. So now since we have stopped the DAP, so my overall under recovery should come down to some extent.
Okay, and this under recovery what you talked about is at a level of 29,000 rupees of a DAP price, right?
Yes.
At current price. Okay, and this. Okay, and continuation of this question mainly, how is the farmer behavior? Because the prices are going up in last 5 to 6 months consistent. Is there any resistance or a volumes basically on the industry front, not on Zuari or industry front basically?
No, we have not seen any resistance as such from the farmers because farmer needs fertilizer. If season is good, if rainfall is good, then farmer buys the fertilizer, but then of course with the higher level of prices in complex and DAP, whereas urea is still at 5,000 rupees, so of course a marginal farmer will look at urea more than the complexes. So it may, but we have not seen that much impact on the sales side or other side, because this year government has also promised higher MSP to all the farmers, so probably that might be the reason.
See, the other thing you must understand that this is just one of the inputs. After all, there are many inputs that the farmer has which finally determine the cost of his planting. So this is just one of the inputs.
All right. And sir, any outlook for a phosphoric acid prices for next maybe like 2 or 3 quarters perspective in a global market basically?
See, on a global market, as I said, there is a certain amount of softening that is taking place. We have to look at what's really happening is, especially South America, Brazil plays a major role, and North America. Prices in these areas are substantially higher than the prices in Asia. And where the suppliers are concerned, our suppliers, they always have the option, if we are not going to increase the price, to go and supply it somewhere else. But currently, there is a slight softening that is happening. I'm not saying DAP is still remaining in the 420, 430 range. Ammonia is slightly stable, obviously because crude prices are also stable at the moment. So given this combination, it looks like that either there won't be any increase, and our attempt would be to try and look for a reduction.
Okay, because what I look at since March to now, actually in November, right? If you look at the phosphoric acid price and the DAP price are moving in sync, actually, right? So I don't know, but basically why the people are basically the Indian player are shifting towards the import of DAP. It is more of an unavailability of a phosphoric acid globally, or it is more of a resistance towards the price. Actually, it's still I'm not clear about that actually.
No, you have to understand that if the import of DAP will make sense during a period when the phosphoric acid prices have reached such a level that has not impacted the increase in the price of DAP. Both of them are meant to go together. But in the last 3 months, though phosphoric acid prices have gone up, the DAP prices have not gone up in the same manner. So then the imports of DAP, that is, will be better than manufacture of DAP.
No, because I look at the price at 31st March, like phosphoric acid was around $680 and now $760 around, right? So it is almost your $80 movement in the phosphoric in the last 8-9 months. And if you look at that DAP price of around 370 becomes 420 or maybe 430. So if you look at 0.46 of 0.46 is a conversion ratio, if 0.45, 0.46, whatever you take, I think it is moving in basically in sync with the phosphoric acid price and DAP prices are mostly.
They do.
So that's the thing. Why
please try and understand one more thing over here is phosphoric acid prices are not just linked to what are the prices that you're getting in Asia. To a large extent, DAP prices are much higher in Brazil. For example, they are running at DAP prices running at 470, 480. And also don't forget sulfur is also there. So all these prices have increased over a period of time, which is why phosphoric acid prices were going up. But currently, there is a stability in the market, so let's hope for the best.
Okay, understood. And Sandeep, can it possible to share the subsidy outstanding what you have right now, right? In terms of like, I think 3,300 odd crores of a subsidy outstanding as a company on a consolidated basis, right?
Yeah.
Yeah. So out of that, I think so. What is the old subsidy, and in the rest of the subsidy, the DBT, I think so. In that DBT, what is the due amount and what is the not due amount actually?
Okay, you contact Nitin, he will share you the numbers.
Okay, sure, no issue. Thanks and all the best, sir.
Yeah.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Rohan Gupta for his closing comments.
Thanks, Rizan. Thanks a lot, sir. I think that we already had sufficient interaction with covering all the important points. Just hope that the scenario improves significantly in the second half, and wish you all the best for that. Thanks a lot, sir, once again for giving us the opportunity for hosting this conference call, and also thanks to participants for logging in the conference call.
Thanks, Rohan, and all the participants who logged in for this call, and thank you very much.
Thank you.
Bye-bye.